Hey, good morning, everybody. Jobs numbers are imminent, but what everybody is curious about is the bank collapse that caused the market to follow further free fall yesterday. So let's get right into it. I'm just watching the jobs report and watching the futures come across the screen right now. They're going to give you the jobs report. The Dow is fluctuating as it always does. When you get a report, it's down 100. Now it's only down 40. Now it's down 60. Now 24, 142. They're processing the information. So we'll let that play out. Right now it's down 100, which is where it was. We'll see if it does a free fall. Now it's 200. All right, so we'll see where that ends up. But let's talk about what happened to the banking industry yesterday and what further crashed the market. And I'll give you the chain of events that happened, okay? Timeline for Silicon Valley Bank's collapse, okay? They announced a fire sale of $21 billion worth of a bond portfolio. The bond portfolio takes a massive $1.8 billion loss. So then they announced they're going to sell shares to cover the bond loss of $2.3 billion worth of shares. So then there's a run on the bank for any bank holder savings checkings that has an account above $250,000, which is FDIC insured. Then the credit agencies come out and they cut the rating on the bank. Then pressure spreads to the other banks are racing $80 billion in market cap. I don't care if we're talking about JP Morgan, Solomon, Smith Barney, or just Citigroup now, Bank of America, Morgan Stanley, $80 billion. And then SVIB, after hours, Silicon Valley, it drops to 60% yesterday. I think it's down 66% pre-market. By the way, Dow Futures just went green. So non-payroll came in at 311,000 versus the 225 estimate. I guess they like that because we saw Dow Futures fall by as much as 200 points. Now, here's the catch. Here's what I'm looking for as far as the SPY is concerned today, okay? Levels of possible rejection. I look at the biggest dark pool level sitting right at 394 and change. So even if we get a pop on market open, and understand, for us to get a pop on market open, you got to go against the psyche of the market. Yesterday, we had the sell-off. Then you had the banking information at 2 p.m. yesterday. So a further crash. There was a huge outflow end of day. So it's great that non-farm payroll jobs have increased and the market happens to like that. But understand the psyche. What we're likely to see, if it's going to be a green day, what are we going to see? Green drop, green open like this, then a big dip, following through with yesterday's late activity, and then we will spike up and go higher throughout the day, and people won't believe it, so they'll be selling off. There'll be a little drop, and then it'll be steps higher. So if you're looking for a bull case scenario, you're going to see a little movement higher at open, a drop, and then steps higher. That's your bull case scenario. Your bear case scenario is you're going to see a little drop at open, a spike all the way up to 394, which I believe will be resistance on the SPY today. So I think we'll see 394. And if worst case scenario, from the 394, we drop all the way to 386 on the SPY. So that's your bear case scenario. 386 is the number I'm looking for. Bull case scenario, yeah, we're going to run up to the 394 level, maybe reject there. If it somehow broke higher, which I don't understand, the only way it would break higher is they said, okay, yesterday's sell-off was too large. But again, now Dow Futures are down 55 points, 46 points, 15 points. So there's going to be a lot of flux at open. Understand, if you're looking or you're in options and you want to get out of your position, you do not have to sell at the closing price from yesterday. You could add 20% on because there's going to be a flux. That's what I'm planning to do. Any bad positions that I want to get out of, I'm going to sell. I'm going to add 20% on to whatever the close was yesterday, and we're going to see a lot of flux at open, and I'll be able to get out of my positions. And if I choose to re-enter, then I will re-enter. Again, your two scenarios, because again, now the Dow's positive 20 points. So again, there's a lot of volatility. Understand the psychology first. The psychology tells you the market totally ripped lower yesterday. Okay. Then you had the banking news on Silicon Valley Bank, right? Which dropped the market and put further pressure, bearish pressure. Now understand, I speak about the US dollar. US dollar's dropped. The 2-year, the 10-year, it's both dropped, making the markets less expensive to invest. So again, as where I was a bear, and I said yesterday, shit, I might even turn bullish, and we saw a push yesterday morning. If it wasn't for everybody's psyche saying the market has to rip lower, and we're just playing today as an independent day based on yesterday's market and yesterday's volume, I would say I could see green today. I know it's crazy, but I can see green today. So when I do get into my lotto plays today, I'm going to look for a dip and a rip. That's my theory. Now, if we see the rip first and there's no dip, then I'm going to look for 394 to reject on the SPY, 394 and change. If we get there, understand right now, pre-market, let's just see where we are right now, 392.39. That's crazy because we were right in the 390 level. And here's the catch. Yesterday's low on the SPY was $390.53. This morning pre-market, we were lower than that. So again, it tells me that we're likely to visit a lower level. That's why I think we might dip and rip today, because I'm thinking, okay, oversold yesterday, banking information, sure, but it's not really going to cause a banking crash like we saw years ago. It's not like, even if they go out of business, it's not like we're saying, okay, who's the next bank? Okay, is it JP Morgan? Is it Morgan Stanley? No, these banks and their balance sheets are just fine. I mean, Wells Fargo, I don't really know about, but I would say Morgan Stanley, fine. Bank of America, fine. JP Morgan, fine. And Citigroup, fine. Am I investing in banks? No, because we have to see how this plays out. If that bank does collapse and go under without some type of support from the government, then there will be worry in the market, and then people will overanalyze other banking stocks. So again, I'm staying away from that the same way I told you all I was staying away from Silvergate SI. It's great if you're in the play first and you see the numbers happening. Like there were people that got in the Silicon Bank puts. They got in, they saw the movement yesterday. They saw it at 2 o'clock, 2:10. They got in and they made a shitload of money. And the smart ones were holding overnight because the smart ones are saying, well, shit, that bank might go bankrupt. Now, here's the thing. Jim Cramer actually thinks they could be, if the stock goes up to 50 and finds support at 50 or 60, they could be a takeover target. And I'll tell you why. I thought this was kind of interesting as well. So they could be a takeover target. Why? Because fuck the takeover target shit. Here's a better story for you guys. Goldman Sachs maintains its buy on Silicon Valley at $312 6 days ago. Wells Fargo maintains overweight on that bank, $350 22 days ago. Raymond James, however, thought $375 was the right price target on that stock, and they set their outperform 34 days ago. And let's just go over the timeline one more time. Silicon Valley Bank collapse. All right. Rumors emerge that they have interest risk on 91 billions of bonds. So what are they going to do? They fire sale, meaning sell their bonds for cheaper than expected. So they did their bond portfolio, $21 billion worth of bonds. They sold for $1.8 billion less than its actual valuation, taking a huge haircut. But they had a solution. Their solution was they'll issue shares. They'll put new shares on the market. They'll do an offering for $2.3 billion. I mean, all these people just upgraded their stock from 6 days ago to 34 days ago. So did that work? No, because account holders said, if I've got over $250,000 in the bank, I'm going to go make a withdrawal or a transfer. So there was a run on the bank. Then what happened? Credit agencies cut their rating. Pressure spread to other U.S. banks, erasing $80 billion worth of nominal value. And then the stock falls after hours. I think it's down like 66%. Okay, so that's just too funny because Goldman Sachs upgraded it 6 days ago, Wells Fargo 22 days ago, Raymond James 34 days ago. It's crazy. All right, so the S&P in the last day, okay, lost $6 billion worth of value in the last 2 hours of trading when we saw that big collapse. Crypto markets down $40 billion. The 4 biggest U.S. banks are down $50 billion in nominal value. And the bond markets are trading like meme stocks, shooting up, shooting down. All the buyers are gone. Inflation is definitely here to stay. So we understand that. However, when I look at the inflow and outflow of the market, I'm looking at the New York Stock Exchange yesterday, and there was $1.3 billion inflow, which tells me, shit, somebody is buying at these levels. Somebody is a long-term holder. I don't care if it's 36 months, 48 months, 8 years, 10 years. They're saying, I'm buying at this level because I know Apple will be a $4 trillion company in 10 years, in 8 years, whatever it is. There was still outflow in technology. Now, let's remember, technology is generally riskier. I was looking at the low of the day yesterday for the SPY, and we were at 390.53. So again, that's going to be a key level for me. If we start selling off, and I think we could possibly go to 386, bear case scenario, right? The sell-off continues. You see 386 on the downside. 390.53 is going to be a key number to watch. The same way, if we are going up, I can bring up Discord. Let me just see. If we're going up, yeah, there it is. So let's look at the SPY level on Discord. Let's just blow this shit up right here. 394.09. So just say 394 and change, okay? 394 and change. If we break that level, which is only 11.07 billion, you're looking at 396. So again, your bull case scenario is, okay, we dip and we rip higher based on futures, based on jobs, and we see 394. Now, if we break 394, then I'm going to be bullish again. I'm going to say we broke 394. We're going to 396, okay? Bear case scenario is, shit, there's kind of a ghost zone. If we hit yesterday's lows, 390.53, then we're definitely going down to 386. So understand, if we break yesterday's lows and there's still downward pressure and there's no quick pop up, if we visit yesterday's lows and you see a quick pop up, then you can say, okay, we're not going to 386. If we hit yesterday's lows and we just stagger and hover around there, then understand the buying pressure is going to dissipate psychologically, right? No one wants to buy in this market. They said, okay, yesterday's terrible. Tuesdays was terrible. Now, what confused me was Wednesday, I thought we'd see a little bit of a pop. We did, but then Thursday, the sell-off continued. So you have to say, when I look at the larger picture, what are they doing? So even if we do get that pop today that I think we could see to 394, I do look at the larger picture and I say, you know what? The market is much more heavily weighted to the put side. The daily puts expiring today, heavily weighted outnumber the calls. When you look at the weekly, you go out till next Friday, again, you're still extremely put heavy. And when you go out to the monthly, and I mentioned this to start off yesterday, I said, even though I'm bullish and I'm saying the same shit today, so maybe I'll learn a little, but I said yesterday, even though I was a little bullish going into the day and holding two bullish positions, remember? What was it? Amazon, Rivian. I mentioned DraftKings. Oh, so let's talk about it. It's a stock picker's market. I don't think the market's going to get thrown up on again today. I think it's a stock picker's market. I went into a lotto play yesterday. I won't mention that lotto play yet until I check the stock. But the other lotto play I was looking at is DraftKings, because I see DraftKings has a ton of support. I hate the company. I hate the concept. Those fantasy things don't make them shit. Bookmakers, when they're allowed to take legal action in every state, now that will make DraftKings a lot of money. That's Las Vegas online. Nobody cares about the fantasy leagues. Even if you're playing them, there's not a lot of money to be made unless you are completely analytical and have these computer programs and AI programs that draft you the perfect team every time. So anyway, DraftKings saw support. I think it was trading at $18.50. And I'm like, I should really get in some lotto plays. This could shoot right back up to $19.22. Yes, 19.18, 19.22. That's where I think DraftKings is going today, as long as the market doesn't throw up on itself. And again, it's probably like what, 18.75 pre-market, maybe 18.79 if it's a little green. But that was a lottery play. Why? Because DraftKings has support. Another stock that has support. I was in Apple calls earlier. Not Apple calls. Shit, what the hell am I saying? Amazon calls earlier, and Amazon was showing support yesterday. Amazon was up to 96, like 50 before the market collapsed. So I'm actually going to look at some stocks now. If you have any questions, please ask them on the sidelines. Okay, SIVB was halted. I've never seen that pre-market. That's pretty crazy. I guess they're doing some buying at $38 to $40 a share. Again, Kramer thought it could be worth $50, $60 a share. I don't know enough to comment, but I do know that the major fuck up yesterday, and I explained what happened. But let's go into some other stocks. Okay, I'm looking at banks. JP Morgan is the one I'm going to focus on. Only dropped 5.4% yesterday. So I just have it on my list to see what it's doing this morning. Oh, DraftKings. Okay, it's up 0.96% now. It wasn't when we started this talk. It's at $18.92. So my exit strategy on that might be, if I thought we were going to have an extremely bullish day, $19.40, $19.22. Here's the catch. Even when other stocks were dropping, DraftKings was going up. So again, I hate the company, but if I had to put a stock on my books that I'm going to be trading in a bullish scenario, it's going to be DraftKings. Okay. Under that, I had Baidu. Why? Baidu dropped significantly yesterday. I do think it's undervalued where it is. Again, the market would have to throw up on itself, but anywhere under 135. If you've heard me a couple of weeks ago when Baidu was 153, and I said, just wait for it to come down. It went to 135. Then it shot up to 146. It's back down at 131. I hate Chinese companies. President Xi got reelected yesterday. There's a positive. Usually that helps the economy, helps the markets as far as, historically speaking. So that just happened. So yeah, I'm thinking China has a good run early next week, unless our markets throw up on themselves. But so I've got Baidu, then I've got Alibaba, same concept right there. Those are my lotto calls. I went into Alibaba. It was $83.33. I bought the $85 calls. Okay. They expired today. I paid $45 per contract. What happened after I bought them? Well, Alibaba went up a little and then it spiked down. And anybody that wanted to follow me in could have got the same contracts for $34. So I paid $45. Thought it was an amazing deal on my lotto play. I'm in for 20 contracts, $900. Not killing myself here, okay? And then you could have got the same BABA contracts for $34. So that's 11 cents cheaper than me. So I was off like 21%. So there's a great entry right there. Okay, let's look at the SPY, see where we're sitting pre-market. We're sitting at 393. Wow. Okay, so again, let's go back to the bull case scenario. Bull case scenarios, you see a little dip at open, maybe even back to 390, and then we accelerate past the 393 to 394.06, the next dark pool level, which is smaller. If we surpass that level, and I mean by like 20, 30, 40 cents, then you could say we're going up to the next level, which is 396 and change. Specifically, let's pull it up. It is 396.43. Again, so 394.09, 396.43. You saw that other support level, pretty small. 391.75, only 3 billion. That's why I didn't really mention it. Again, we're past that pre-market. So again, I'm looking at those numbers. Once you find support 20 or 30 cents, then yes, you can go higher. But you have to understand, again, the psychology, and this is why we're not just going to rip at open higher. The psychology is yesterday was a fucking crappy day. I'm getting the chance on this spike pre-market to get out of my shitty stocks. So people are going to sell the spike. Now, if there's true support for the market at this level, and understand 90% of the money in the market comes from 10% of the people, whether it's the hedge funds, other funds, big money, you're talking about 90% of the market comes from 10%. So if those 10% say, you know what, the market's not crashing, yesterday was a fire sale, I'm buying Amazon, Google, Apple. Now here's the catch. I heard my first downgrade on Apple this morning. I think it was called Link. Somebody downgraded Apple to $120 and gave it a sell rating. Apple's at $150. First time I've heard that in a long time. Usually they wait for the stock to go down to $120 and then they come out and they say, okay, price target adjustment, $120. Now I'm looking at the US dollar. I could be wrong, but it just looked like the US dollar was in the 104 range. I just saw it flash across my screen. Yeah, so another reason to be bullish, you can look at the US dollar. It's dropped. Let's just go to the 5-day. You can see the significant drop. There's the 5-day. Oh, you can see a little bit of it. Lower. There we go. Huge drop this morning. So we're filling that gap that we spiked up the other day. And if the dollar goes down to 104.50 or 104.40, which would still be another 40 cents, understand the markets are going to rip higher. And when I say rip higher, I don't mean like 109 points higher. I mean like 300 points, 350 points, 400 points. You're going to see a reversal. Again, that's the US dollar. The US dollar could easily spike back up. Powell can come on. Another Fed chairman can come on. So again, please keep your eye on the US dollar. 104.83 right now. If it goes down under 104.50, the markets are going to rip higher. If it rebounds and you're seeing back at the 105 level, all of a sudden it just fills that gap. You have a little V right there. Then no, the markets are going to continue to see downward pressure. The Dow's up 35 pre-market. You'll see the markets rip lower 200, 300, 400 points. So yeah, I think today is going to be an extremely volatile day. The advice that I would have is whatever position you're in, give yourself enough time to be correct. And if you're in 0 days till expiration contracts, then understand we're going to see volatility. Just because it drops significantly, expect a spike back up. When it spikes back up, expect a drop again. Don't think that we're just going to go bump. I told you, if we're going to have a bull case scenario, you're going to see steps higher. That would be your scenario. If you see it rip higher and then rip lower, no, more volatility tells me I'm more apprehensive. All right, let's see what we got here. Ken, you're thinking we got what, 396 by Tuesday? Shit, you're way off on your timing. It could be bull case scenario 396 today. Bear case scenario is 386. So you've got your range right there, but you're early, meaning, you don't have to go out till Tuesday. If it was going to rip higher, like meaning if we're going to see 396, it'll happen today. If we're not going to 396 on Tuesday, then it's definitely dropping today, and there's no way we rebound on Monday and Tuesday. It's not like we're going to drop today and go to 386, and then you're right buying saying 396 on Tuesday. If we see it, you'll see the US dollar go down, you'll see interest rates go down, and you'll see the markets rip higher. Jobs numbers came out. Yeah, 311, I think was the number, 100,000 over consensus. Again, the market liked that. Can we look at the levels on Tesla? Oh, that's such a good question. Sure, we can. Why? Because we have Discord right here, and anybody that's part of our Discord, and there should be a link below, can go and type in this. Let's look at the dark pool levels for I also want to look at the top flow. Let's see. Let's look at the top flow. Top flow. All right. Anytime, computer. Are you guys seeing this with me? Yeah, delayed. Yeah. Okay. Well, now it's working. There we go. All right. So dark pool levels for Tesla. Let's see where Tesla's trading right now. Tesla is at, okay, so 104.85. Yeah, I'm keeping my eye right on the US dollar, 104.79. It's playing around. Everything looks green. Pre-market. God damn, DraftKings is up over 1.28%. Amazon's up 1%. Rivian's up 1.5%. All right, Tesla pre-market. Let's just say it closed at 193, 192.72, off 9 points. So understand yesterday's day range was opened at 181, up to 185. So there was some buying pressure, and then dropped all the way to the day low, 173 at close. Looking at it pre-market, it's got to be at what, 2%? Yep, 2%. Okay, so you always make a prediction. It's at sitting at 176.75. So we look at Tesla, make the chart nice and big for everybody to see, and we'll say, okay, Tesla again, 176 pre-market. So yeah, I would be looking to see the 178.57 level. Understand this dark pool level here and here significantly lower. So if Tesla falls off, it doesn't see support to under 168. So if Tesla happens to have your bear case scenario being at 176 pre-market, understanding that probably around 162 might be the next support level. You're not even seeing it on the dark pool. You're saying, wow, okay, 14 points, it could drop. Now, likewise, you want to say, where are the largest dark pool levels here where it could reject if it goes up? And I would say something like this, 188.99, 184. Let's just say 184 to 189. So the fact that we're sitting at 176, if the market rips as we open, I would expect Tesla to rip with it and go up to 184. Yeah, Ken, I was thinking the same shit. So reverse Apple, if they upgrade by puts, if they downgrade by calls. It's funny that you mentioned that because I was like, really? Because I've seen demand for Apple. And if the market does stabilize and all this financial news gets pushed aside, then yeah, I saw demand in Apple. Here's the thing yesterday, even when the markets were ripping lower, Meta, okay, Facebook, Meta was up 2%. It went from up 2% to down 2%. Yes, there were other stocks that got ripped even harder to the downside. But if I had to be bullish on something, I would be bullish Meta. I would be bullish DraftKings. No, I'm not chasing DraftKings. Entry was $18.50. The fact that it's at up, that it closed, at 1876 and it's at, let's just see where it is, up 1.28%. So it's 1898. I'm not tracing DraftKings off this thing, but I did like the bounce yesterday because I've seen support for that stock for a number of days. And let's remember, after earnings, it pushed all the way up to $21. So again, that would be a place for me to sell as far as that's what I'm thinking in that stock. Let me see if I can mention a couple other bullish and bearish stocks. Okay, so you mentioned bullish bearish stocks. Let's go back to Discord real quick. And I looked at the top flow before I typed in the dark pool level. I looked at the top flow. Again, I might think these are hedges, SPX, green, Russell, green, Apple. This might tell me it's a little bullish. The financials, I guess people are expecting them to bounce a little. Materials play. On the bearish side, what do you see? You see Tesla here, Nvidia. Yeah, I mean, I've been hearing Nvidia for days, and Nvidia's been pushing higher. So you don't always have to, go with what you hear. Again, Nvidia is a tough call. I just wanted to mention it because I've heard people on Discord saying Nvidia should go down. Nvidia's PE is so overvalued. It's the big money that decides when the chip sector is overvalued. Right now, I heard as of like 3 or 4 days ago, they were still buying chip companies. And let's remember, Nvidia was, let's see where it closed at yesterday. Let's see where it's at this morning. I'm so curious. 233, I'm going to guess, right? 234 it closed at yesterday. Okay. So I was close. Yeah, I mean, and it's at 236, 237 this morning. So again, you can see the pattern. So the pattern is going to be a W. And if it's a W, then we're going to higher highs. Okay. So if you want to be a bull, you could say, okay, Nvidia. And again, you'd be chasing because you could have got in at the low, 233, 234. Why the hell would I want to buy Nvidia calls at 236, 237? I wouldn't. That's a whole 2.5 points. It's Friday. It's a lot of Fridays. Even if you're buying out a couple of weeks, I want to be on the bottom. So again, if I'm going to be bullish in Nvidia, now I mentioned this because there's going to be volatility at open. So I would set my call bid very cheap and try and get it at yesterday's low or around yesterday's low or 234 where it closed at. I wouldn't chase all the way up. Bear signal is shit. I've heard people saying sell, sell, sell. Their PE is too much. Where could it go back down to? 212. So we're sitting at 234. If the market's dropping, the SPY hits 386 today, and then you see 376 next week on the SPY, then yeah, Nvidia is going back to 212. If the market's ripped today and the US dollar drops and interest rate drops, then you're saying shit, Nvidia was just a bargain yesterday at 233, at 234 where it closed, and it's 236 this morning, and it's going back to the 242 level, 243. I actually thought 244 the other day. So there are your scenarios. Same thing's true for the market. Again, we're starting a little green now. Yesterday we started the same way, and I came out the same way, and I was like, hey, I'm a little bullish. I expect we see 401. Well, shit, I'm going to tell you this morning, I expect we see 394. I don't know where the SPY is sitting in pre-market, 392.95 now. So again, key level for me, 394.09. Break that, 396 and like 37 cents. Not breaking that. If we go up to 396, man, I would be shocked. But again, that would be my exit case because I'm like, okay, stocks are ripping. I'm in the position from when we broke the first level to where we get to the second level. I'm out. Or I might scale down just saying maybe they let it run even higher. Bear case scenario is psychology. Shit, the market's tanked yesterday. Crypto lost a shitload. Bitcoin is what? At 20,185 right now. You got DocuSign, which was strong, is at $55 this morning. It was up $8 yesterday. But again, Apple's showing support at 151. Now, I apologize. Yesterday, I think it was two people that were watching. I said, no, Apple and Meta, they're like the strongest components of the market. So the market would have to rip lower for you to be profitable. Well, those two stocks went down. Could have been profitable if you hold on to your puts. I was in snap puts earlier, man. Those snap puts, which I got in at 25 cents, the low was like, I think 20 cents or maybe even 18 cents. 25 cents was my average. Those things went all the way to $165 a contract. When I got $32, I said I should have got 38. If I even sold for 38, I'd still be upset at myself because, again, 165 from 25 cents. You got to know when you get good entries. So, again, please look at your trades. Don't get scared out. Give yourself enough time. If you are playing lottos, make sure you're calling the absolute bottom or top. Give yourself a chance to be correct. Wait for rejection. Don't say it should reject here because I watched Matt this morning and he's been right a lot. No, watch to see it reject and then make sure you get the confirmation. I make a lot of trades off the 1 minute trade. Like a sniper. And I'm wrong because the market fools me for 1 or 2 minutes. You need to go 1 minute out, 3 minutes to confirm, 5 minutes to be sure. When you see the 5 minute confirms your pattern, it's okay to get into whatever play. That's about it for today. I'm headed over to Discord. Everybody's welcome to join me. Should be a link below. If you liked what I said today, and today was damn good, give me a thumbs up and join me on Monday. See you guys later. Appreciate you joining me.